Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. And if you want to read what John writes on a regular basis, you could just head directly to www.incomeinvestors.com, and there you could also sign up for some special reports that we offer that get mailed directly to your inbox. At the start of 2023, Wall Street was significantly bearish on the US economy, with many warning that a recession, and a severe one, is coming. This was bad news for energy bulls, and especially for oil and gas sector. This led many to warn that oil crash is coming. This hasn't happened yet. The economy is resilient. Unemployment is at 50-year low. Oil prices have been ripping higher, and oil demand has exceeded expectations. All of these industry dynamics are great for our income pick today, Chord Energy Corp, traded on NASDAQ under symbol CHRD. John?
Yeah, thanks, Mo. Now, you may not be familiar with Chord Energy. It only went public in late 2020, but even then it was under a different company name than it is today. In July 2022, Whiting Petroleum Corp and Oasis Petroleum joined forces to become Chord Energy Corp. The $6 billion merger created a scaled, unconventional U.S. oil producer with a premium position in the North Dakota and Montana regions of the Williston Basin. And the combined companies also enhanced overall cash flow. At the time, the company said it expected to return 60% of its free cash flow to shareholders through a base dividend, variable dividend, and a $150 million share repurchase program. The base dividend, which began in the third quarter of 2022, was 58.5 cents per share. That was then. Fast forward a year to September 2023, and Chord Energy is home to the largest acreage position in Williston Basin and one of the region's top producers. Its operations include approximately 963,000 net leasehold acres, which approximately 99% is held by production. The company averaged around 169,000 barrels of oil equivalent per day in the second quarter. Of that, crude production came in at approximately 4,600 barrels of oil per day. At that pace, it has an inventory of approximately, I'd say, 10 years.
And that assumes that it doesn't increase its property, and it has been increasing its properties.
Yeah, you're correct. This past May, Chord Energy announced that a wholly owned subsidiary entered into a definitive agreement to acquire assets in the Williston Basin from XTO Energy. They're an American energy company and a subsidiary of, energy giant ExxonMobil for $361 million. The acquisition, which closed in the second quarter, provides Chord Energy with 62,000 net acres, a current high margin production of over 6,000 barrels of oil equivalent per day, high return inventory additions expected to extend Chord's overall inventory life, and it now expects to return 75% free cash flow to shareholders.
Now, John, let's talk about numbers here. How did this company do in the most recent quarter?
Really well. For the second quarter, ended June 30th, Chord Energy reported oil volumes of 96.4 thousand barrels of oil equivalent per day, which was at the high end of guidance. The total volumes of 169,000 barrels of oil equivalent per day was also above the high end of guidance. Now, net cash provided by operations was $408 million, and that was up 3% year over year. Net income was $216 million, or $4.96 per share. Meanwhile, adjusted EBITDA was $369.6 million, and cash flow was $105.3 million.
So, cash rich, how does that impact its dividend?
Some oil and gas companies have come up with a novel way to pay dividends that maximize returns when commodity prices are high, but still pay a sizable dividend when the industry is facing headwinds, and that's through base plus variable dividends. Companies like Chord Energy pay a solid base dividend every quarter, and then add a variable distribution on top of that based on their cash flow. Now, when times are exceptionally good like they are now, energy companies will also hike their base dividend. In the second quarter of 2022, the company increased its base dividend by 114% to $1.25 per share. That was up from 58.5 cents per share before that, and it has held it at $1.25 per share since then. Now, the variable dividend, by the very nature of its name, will change every quarter. In the second quarter of 2023, the total dividend was $1.36 per share, or $13.05 on an annual basis, for a yield of 8.23%. Now, the company also repurchased $31 million of shares at a weighted average price of around $147.60 per share.
Let's talk about how is a CHRD stock doing lately.
Well, Chord Stock is doing actually even better than its dividend. Thanks to strong industry tailwinds, Chord Energy Corp stock has been seriously outpacing the broader market, with Chord Stock up 28% year to date and 27% year over year. It actually hit a new record high of $167.81 on this past September 6th. Now, strong gains, but equally impressive gains could be on the horizon for Chord Energy, with Wall Street analysts providing a 12-month share price target of between $183.78 to $221.
All right, John, thank you so much for your analysis. Houston-based Chord Energy Corp is an oil and gas exploration and production company with the largest acreage position in Williston Basin. It has a strong balance sheet, a resilient cash flow with a leading return of capital framework, which includes share buybacks and its base plus variable quarterly dividend. Last year, the company paid out $27.03 per share as part of its base plus variable dividend. A good portion of that, though, $15, was a special dividend that came from the July 2022 merger. So far this year, the company has paid out $9.38 per share in dividends. Thanks to strong oil and gas prices, record demand and consumption, the outlook remains excellent for both Chord Energy stock and its high-yield dividend. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.